And so there's kind of a concern with some investors that if everybody indexes, then there's nobody selling positions based on their technical analysis or on their fundamental analysis, which would indicate whether or not a stock is overpriced and would correct the value of the stock. In other words, if everybody is just constantly always buying the same stocks, there's no check in a checks and balance system to determine whether or not that stock is overvalued. So this has led to concern that if everybody indexes, then the market will become exuberantly irrational. Prices will go higher and higher and higher until there's some kind of catastrophic collapse because the prices are so far out of range because nobody has ever been checking them and selling against those buys to keep the prices at some kind of rational level. The answer to that from a passive investment standpoint is that there will always be greedy people who exist in the world who believe that they can outperform the market. So on a practical level, it is unlikely that every single person will index or use passive investment management. So that risk is very low. But even if everybody did start to index, people would then take the opportunity now that the market has kind of given them to gain market share and to gain profits by trading against these irrational investors who are just buying and buying and buying.